Hello, everyone. My guest today is Matt Britton. He's the founder and CEO of Suzy, an on-demand human intelligence platform used by over 175 leading brands, including Microsoft, P&G, and T-Mobile. Matt, you ready to take us to the top?
You know it.
All right, man. Jump in here. So for people that have not heard of the business before, they missed your first episode. What's the company do?
So Suzy is a software platform that allows companies to instantly become in touch with their customer, to get instant feedback on anything from product design, packaging, or even to come up with new ideas with the customers that matter most.
Yep. And so how do they do this? Can you tell us how P&G is using you?
Sure. So I can't speak to how any individual customer uses us because frankly, I don't know. I don't have access to their individual dashboard. But the way Suzy works is we have a network of over 1 million US consumers that are on a gamified platform called CrowdTap. Those consumers earn points for answering questions anonymously on behalf of our customers. So if you're a mom, age 34, and somebody wants to hear from you, you'll get a question, either qualitative or quantitative form. You respond. The aggregate of those answers go to our clients who are licensing the software that ask the questions, and they can expect up to 500 open-ended responses during the same meeting they actually ask the questions in.
Yep. Now, make the link again between CrowdTap and Suzy. Are they on the same cap table, same tech stack?
Yep.
Okay.
Yep. So CrowdTap was the original company which I spun out of my agency, MRY. And basically, when I joined CrowdTap in 2016 after selling the agency to Publicis Group, it was an influencer activation platform. So they were having the members of CrowdTap create and share content. That business has kind of leveled off over time, and I knew I had to sort of unlock growth and new opportunity. So we essentially changed the use of that network of CrowdTap by, instead of having them create and share content, answer questions. I also knew I needed to create a new B2B brand to sit on top of the CrowdTap network because CrowdTap had gotten the reputation of being in the influencer space. So that's where Suzy was invented. So it's basically two different brands under the same company.
Now, back on October 25th, 2017, when you and I spoke last on this show, you had articulated that ARPU was around, that's monthly ARPU, was around kind of $11,000. So very much enterprise motion. And you had about 70 customers at that point. Update those numbers. Have you moved upstream, and how many customers today?
We have nearly 200 customers. Our average now 11,000 was a monthly number, not an annual number.
Correct.
I believe.
ARPU.
I didn't quote the exact number because I actually just listened to that podcast again this morning because I roll. But right. Revenue annually per customer is around $75,000. We started to work with a lot more middle market companies as well, which has brought that number down slightly.
Yeah. By the way, nothing wrong with that, right? It's just a strategic decision. Yeah. So when you told me, by the way, when we talked about this last time, we talked in terms of ACVs, and you had said somewhere around 130, 140, which would have been about 11 or 12 grand a month. What you're saying is you wanted to expand your top of funnel. You've moved downstream a little bit. Now, let me ask you, many times when companies do this, it throws your salesperson pro formas all out of whack. Quota targets, like volume, demo to, conversion trial, all that stuff out of whack. How did you make sure, or how did you update how your salespeople were selling with a lower ACV?
Well, when we had talked, we were just launching Suzy. So a lot of the clients that existed were kind of ones that we kind of reconfigured from the legacy CrowdTap business. So our sales team was kind of built net new from scratch going to market. So there wasn't really legacy issues that I had to kind of pivot away from.
Okay, fair enough.
Yeah.
Okay, good. So the company, and remind us again, CrowdTap was launched in which year?
CrowdTap was launched in 2011 and was spun out of my ad agency, Mr. Youth, which is also known as MRY.
And Suzy got going in what year?
Suzy, we officially launched at South by Southwest last March 2018.
March 2018. Okay, good. And then, so I was asking this question, how much did you total spend on building Suzy before your first dollar of revenue?
Well, when we first launched Suzy, we essentially took the legacy CrowdTap platform, made it purple, stripped out all the functionality that weren't Insights, and called it Suzy. Then last summer, we had to re-platform, and that was some of the hardest months of my career because when we re-platformed, the site actually was intermittently down and had terrible performance issues last summer. So keeping the customers that we did have sticking with us was not easy. We did have some churn as a result of it because we essentially had to rebuild what is now known as Suzy today from scratch, but it's been up and running and kind of blazing fast and incredible functionality ever since. How much money we put into building the new Suzy? If I had to guess, I'd say anywhere between $250,000 and $500,000.
Okay,
we have a really efficient program, development team.
Not bad. Okay, quantify that churn for me. I'm curious. As the re-platform happened, past 12 months, revenue churn was about what?
We actually have 100% net revenue.
What's a gross basis though?
Gross basis, I would say 20% annual churn. So maybe like 1.5% a month.
Yep.
Tops.
So just to be clear, 20% gross revenue churn means you have 20% expansion to reach net revenue retention of 100%.
And that's where we're at right now.
How are you driving expansion revenue? What are you upselling?
It's both upselling and cross-selling. We're going from one brand at Microsoft to multiple brands, and we're unlocking new functionality in the product, new ways to ask questions, as well as unlocking more specific targeting segments on behalf of our clients, which creates upsell opportunity.
Are there any value-based upsells like number of questions asked per month or number of targets reached? Okay, what are those?
Sure. Yeah, so basically the way our license tier works is, for the most part, the number of questions you get on an annual basis. We don't really do monthly because some companies have seasonality. So you buy a certain amount of questions. Not all questions are created equal. Quantitative questions cost more than quantitative. So we kind of have an internal credit system, and based upon how much the client spends, we give them options. You can get X amount of quantitative, X amount of qualitative questions that come up with an annual kind of license total. That's the biggest driver of the cost. But then, as I mentioned earlier, now we're unlocking new action types and also more specific targeting. We're partnering with third-party data providers who are essentially overlaying our first-party panel data with their third-party panel data, so we can know if our panel members are Costco shoppers or if they own a Mazda.
What's the source of truth on that? The customer email, a credit card number, and a geolocation?
So we're matching the PII, personally identifiable information, which, by the way, we never share with our clients, with a third-party company, and basically they have a variety of different inputs for how they get their data, and the culmination of that is much deeper targeting segmentation.
Interesting. Okay, talk to me about how you funded this bad boy. So bootstrapped, or have you raised capital? If so, how much?
So it's kind of a convoluted story, so I'll try to keep it as simple as possible. Basically, Mr. Youth was a company that I started way back in 2002.
An agency.
An agency, yep. I built it up from one employee to about 500. It was acquired in 2011 by the Publicis Group. Before it was acquired, I spun out a company called CrowdTap. The impetus of CrowdTap was to manage and measure student representatives, which then became kind of bloggers. We spun that company out. When we spun it out, the same cap table of the agency became the cap table of the new software company, CrowdTap.
Oh, wow. Were you majority owner in the agency?
I wasn't, because we had done a private equity deal in 2008 where I took some money off the table and got one of the old partners out. I was the largest individual shareholder.
Who was the PE firm?
They're called Alta Communications out of Boston.
So they're still on the cap table?
They're still on the cap table. They already got a 3x return from the agency, and now it's all gravy. But
was that a mistake?
I actually closed the private equity deal on the night of the Lehman Brothers collapse. I, like everyone else, was kind of freaking out about my future. I just had my second kid. I didn't take a lot of money out of the agency. So in retrospect, I wish I wouldn't have done it, but life doesn't work that way. You know, when you live and you learn. So they don't teach you about that in college or high school, right? What to do about private equity deals and secondary offerings, things like that. So spun out CrowdTap. The CEO of CrowdTap was my original product manager from the agency. He went with the business, and I helped him raise the Series A in 2012 from Foundry Group at about $6 million. They raised an additional round, I guess you can call it a B round, a couple of years later of another $6 to $7 million. Foundry led that again, and then when I came into the company had also.
Wait, where were you though?
I ran after I sold the agency, I was at Publicis Group. My earnout.
I was going to say that beautiful was it a 4-year earnout?
It was a 3-year earnout, and then I had some friends at this company, Summit Series, which is a big entrepreneur conference that I ran for a year. It was almost like an externship, just to kind of get away from the corporate world for a little bit. And then I rejoined. And then when I joined, the company also had some venture debt. When I came up with the idea of Suzy, I needed a little bit more of a leash to basically build the business. So we got an extension of the B round for another $5 million.
Wait, did you raise the $6 million debt round in 2015, or that was before you?
That was before I joined.
Yeah, got it.
So when I joined, that $6 million of venture debt was already there. I got an extra $5 million on top of the B, just so I had a little bit more of leeway to basically build Suzy. And we restructured that venture debt at the end of last year, which freed up a little more capital. And now at the end of this year, we're going to be raising a growth round.
So real quick, when you came in, you would not take that extra 5 from Foundry in 2017, take that dilution, unless you were like in a position where like, crap, like I want more runway to feel comfortable here with a re-platform, for example, right?
I mean, we basically were walking away from 90% of the revenue to stop driving it, to focus on what was 10% of the revenue to build into a new business. So you're not going to go 2 steps forward without taking 1 step back.
So when you joined after that debt round, what was a range is fine, but what was the run rate at that point?
Well, it wasn't really a run rate because CrowdTap was more of a tech-enabled service business, so it didn't really have recurring revenue. So it didn't really have a high renewal rate. It was highly unpredictable. It was almost like a media type business, and it was shrinking, right? So and the costs had blown out of control. There was a second CEO would come in between the guy who I put in and when I joined, and it just wasn't being run the right way. Not necessarily his fault, but just the market conditions.
So what did you do in 2016, even on that model? That's not really SaaS. We're talking like 10 million, 5 million, 1 million?
Between 5 and 10 million.
Between 5 and 10. Okay.
It was burning a ton of cash. And then in 2017, we actually had to cut about 70% of the staff along with raising that capital. I just needed to basically conserve capital, refocus on this new business, a lot of which wasn't going to spit out revenue right away. So it was like the heart of the pivot, so to speak. And it was really hard. Coming out of 2017, we had the vision for Suzy right around when we last spoke, launched it in 2018, and it's been off to the races ever since. Now we're cranking.
I mean, is this right? Can I take those 200 customers times that ACV you gave me earlier, 75 grand? That would put you at like $1 million to a month, something like that.
It's around what we'll be in this year, probably a little higher.
Yeah, and so would you consider all that 1.2 million a month pure SaaS at this point?
Or pure SaaS. In fact,
feels good, right?
Yeah, it feels great. I mean, we've stripped out things that arguably was legacy CrowdTap revenue, which we could have called SaaS, because we just don't want to screw around with that. Yeah. Like SaaS is SaaS to us. We want to have, we're going to be benchmarked against other best-in-class SaaS companies. We want to have the gross margin profile, the renewal rate profiles of other companies in our space.
Yep. Okay, good. So you hope to break 1.2 by the end of this year or soon.
We're going to blow by 1.2 at the end of this year.
Where are you at today? About 1?
Yep, just around there.
And where were you exactly a year ago? Just pure SaaS?
We were, I think, around 600,000. We're growing at about 80% right now.
I mean, considering everything you've gone there, that's pretty damn good, actually.
Yeah, we had a little misstep in Q1. I mean, it's funny because when you take a step back and you think, we launched this product last year.
Yeah.
And at a point right now where we're going to be at a place where most SaaS company takes 5-10 years to build, it's good to think of. And we had a misstep in Q1 because we had, some churn in terms of our employees, and we had the product going down last year. But without that, we'd be at over 100%. And the renewal rate is actually accelerating. I mean, the growth rate is actually accelerating again.
Yeah. Well, and by the way, like so the most successful, like I've interviewed about 3,000 now SaaS CEOs. So I like to look at patterns. The most successful, and I'll just measure it purely based off just capitalistic ARR, right? The ones north of 100 million, almost all of them start off as an agency because you get unique insights into all the customers' problems, and then you codify the problem. Right. So, like the actual story, right. In my opinion,
instead of coming to,
No, sorry, we're cutting in and out. But I'm just saying, in my opinion, your story is actually like most companies will move from like an on-prem to a SaaS. Your story is actually moving from like a low margin cash like agency media business to pure play SaaS, going to $1 million, $12 million run rate essentially in under 18 months.
Yeah. And I should say our agency was pulling 25% EBITDA margins at the end of the day.
Pretty good too.
Because we had that CrowdTap impetus with that IP was built into the services model. But yeah, I mean, I think it's because you understand the customer pain points. I mean, I worked with CMOs for 15 years. I understand what they need, especially with our business. I'm not coming at it from a market research standpoint. I'm coming at it from a business builder standpoint. And I think that curse of knowledge can sometimes hurt people who sort of are, part of the industry that they're going into, where I'm coming in from the outside looking in. And now we're actually bringing on market research experts to actually help us because we're going up against companies like Qualtrics and SurveyMonkey. Qualtrics, obviously, we know about the big acquisition. SurveyMonkey just went public. Those companies are in our space, and that's who we're competing with.
What's your team size today? How many people?
We have 65 full-time employees.
How many are engineers?
15 to 18.
How many quota-carrying reps?
Quota-carrying reps, 8.
What do you set when a salesperson's fully onboarded? What's your salesperson profitability when you compare their quota relative to their full comp when they hit OTE?
We like to hit 5x.
Okay, good.
So if someone's full earnings are 200,000, we want to see them bring in $1 million in license revenue. That doesn't count project revenue, because sometimes we'll do projects for clients for 20, 25 grand, actually show them the value before they sign a license. I don't count that. I kind of look at that as cost of acquiring a customer.
Do you ever sort based off cohorts or 200 customers based off who you put $25,000 professional services on and what their retention rates look like compared to people that you did not touch with professional services?
So it's not even professional services because they're paying us $25,000 to do a project. for us to actually prove the value. We're not spending it on them.
Okay.
But we do compare customers by cohorts by how, enterprise customers versus mid-market customers who have some type of managed service component versus pure play self-service customers. We're always looking at that data. Our whole mantra at Suzy is kid tested, mother approved. The mother is sort of the expert survey research person. The kid is the person that just needs the data and doesn't really care about market research. We kind of need to appease the master market researcher while being easy and kind of intuitive enough for the everyday person that just needs to get consumer feedback.
Yep. You took care. It sounds like you wiped out the debt a year or two ago.
No, we restructured it.
Okay. So what does that mean? Yeah. So when you first, who did you raise from? Was this an SVB kind of loan?
Yeah, it was the venture debt. Original venture debt was through Trinity Capital, and we restructured it through a company called North Atlantic Capital out of Portland, Maine. The biggest difference with the second round of debt and the first is the second one is an interest only component where there's no principal payback, and then there's sort of a balloon payment at the end. So it basically takes away a lot of sort of the drain on cash flow.
How aggressive is the rate? Are we talking like 6% or like 12%?
It's at the higher end. I don't know what I'm able to disclose.
Yeah, no, that's fine. I ask because there are so many of these loan offerings now, and it's so hard to compare them all equally because they throw in all these weird freaking terms and it's not normalized. So calculating effective APR is tough.
You need to be at the place where you can pay it back. Listen, if you can't pay back that balloon payment, your company is gone. But with the terms we had and the growth that we have in the business, for us it was kind of a no-brainer, and it really bridged us. We were sort of in the tweener phase last December. We were thinking about growth round phase, but growth round investors want $1 million MRR, right? They want a little bit more of an operating history. And we were sort of too big to be early stage and too small to be growth stage. And now we're right in the heart of growth stage, and we have a ton of inbound interest, and we want to get the right investor to come in and help us grow to get to 100 million.
When do you think you'll do that next round?
We're going to do it in the fourth quarter.
Okay, in Q4. And what do you think the right target is in terms of what you want to raise?
Probably going to raise around 20 million. If we're concerned, we could get 8 to 10x revenues. So, you're looking at anywhere between 100 to say 150 million valuation. And based upon the ownership stake that most growth round investors want, we'll probably raise 20 to 25 million of outside capital. Part of that could be secondary.
Yeah. And you'll sell, call it, 10-ish% of the company, maybe a little bit more percent of the company, 15%.
That's what growth investors need for it to move the needle for them.
Yeah. Interesting. Okay, very good. Let me just make sure I've got nothing else here. Do you have more? You didn't have a lot of insight into this last time because it was new, but do you know what your fully weighted CAC is to get a new $70,000 ACV account?
It's about 54,000.
Okay, good. I mean, so healthy payback period there too.
Yep.
Yeah, good stuff. All right, man, let's wrap up with the famous 5. Number 1, favorite business book?
Hard Thing About Hard Things by Ben Horowitz.
Number 2, is there a CEO you're following or studying?
I actually love following Jason Lemkin, who's more of a kind of SaaS expert, but he obviously sold his company to Adobe, but I get a lot of insights from him.
Number 3, what's your favorite online tool for building your company?
I love a tool called Insight Squared that we use. It sits on top of Salesforce that gives us sort of real-time sales information about how our sales team is performing.
Number 4, how many hours of sleep you get every night?
6 to 7.
6, that's good. And situation, married, single, kids?
Age, 2 kids.
I love that. All right, and how old are you?
I'm 44.
44. When's the wedding, by the way?
November.
Oh, that's exciting. You letting her do it?
You're invited, Nathan.
Yeah.
You're invited.
You don't want me there. I'm going to be asking revenue questions in the seats of all your SaaS friends. All right. Last question.
I want to answer them too. That's the scary part.
All right. Last question. What do you wish your 20-year-old self knew?
A couple of things. I think first and foremost, to think more long-term, don't chase the small deals, think big picture. Your time is a huge opportunity cost if you're not spending on something that is really realizing your vision.
Yep. Guys, Suzy.com, built on top of CrowdTap, again, helping big brands really get intelligent feedback from customers via surveys or even prospective customers. Now doing, call it $12 million in ARR, up from $600,000 a month just a year ago. Healthy growth rate, 200 customers paying, call it $60,000, $70,000 ACVs. They've raised $26 million to do this, 65 on the team, 100% net revenue retention with a payback right now of about 10 months to land a new $75,000 ACV account. All right, Matt, thanks for taking us to the top.
Thank you.